Okay, let's try this again. This is actually the second time I'm trying to record this video. I already did it once, but it didn't strike me I should actually unmute the microphone, so I just spent like, I don't know, about 27 minutes speaking. And at the end I realized, oh, damn it, the microphone was on mute, so I'm gonna try to do it again. The topic of the video is Bristol Myers Squibb, but I'm not trying to promote this company because it's already going up. I did a video about it. If you have a look on my channel, I did a video about a month ago. I didn't really know how I'm gonna shape my channel. I still don't know. I'm kind of swimming around and trying to understand what do I want to do. Because the channel is very small, I have the privilege to test and then just, whatever sticks. But I quickly came to the conclusion that I don't want to recommend stocks on my channels, because initially, when I started investing, I invested just like this. I was looking on the internet. I was listening to these voices and listening to their arguments, and then if I liked the arguments, and then if I liked the company, I put my money on it. And I ended up losing a lot of money. I literally killed my portfolio. I lost about 50-60% of the of my money. And then I was thinking like, yeah, now I learned how to do it. I'm gonna do it better then, and I'm gonna start a YouTube channel, and then I'm gonna promote my methodology, and then hopefully I'm gonna help some people to not lose money. But it only took me 2 videos. I did one video where I was highlighting Bristol Myers Squibb as a good investment, and then the second video which I highlighted Nike as a potential value trap. Okay. And so far I was right, but that's not the point. That's not what I'm doing. But Nike didn't really go anywhere. BMO is starting to go up. So I picked up the company here. I actually liked this company for a very, very long time. So it was kind of undervalued, and I kept following. And then at this level here, I decided to start investing after this earning report, right? But yeah, the video is not about making or convincing you to invest in this company. The video, it's about how did I pick up this company, because I picked it up well. And normally when I'm investing my stocks, it's taking me like quite a lot of time. I'm gonna spend like probably a week to research the stock, probably look at the 10K report, look at the financial reports, like historically, to see what they are talking about, what's happening with the business, and so on. I'm trying to the best of my competence to understand the business. But in this case, obviously, I'm not a big pharma expert here. By profession, I'm an engineer, a GIS engineer. So I don't have a clue how they operate, what they do. You're never gonna get to that expert level to understand the company, like to know exactly what's happening, or to see these trends and stuff like that. You can try to do it to the best of your knowledge, to the best of your competence, and so on. But we're not at expert level, frankly, right? But yet somehow I picked up this company at the right time, because I picked it up here. And I want to make this video to explain you how did I pick it up, right? How did I pick it up? And this is what I'm gonna do on my channel as a rule. First of all, I'm gonna re-evaluate stocks that other people are proposing, and then I'm gonna do my assessment, and then I'm going to highlight them as overvalued or undervalued. And I'm going to promote two principles because they're very, very important. Even if you don't have the knowledge or the expertise of the industry, this will going to keep you safe to some extent. And principle number one is free cash flow ratios. You need to understand relative to the company's values, how much money they're making. If you have a company which is trading at high free cash flow ratios, that's an indicator that the company it's undervalued and could be a potentially good investment. This is exactly what I did here in BMY. So if we have a look at my video, on my first video, I calculated this ratio, yeah. So at the time, free cash flow, let's pause. So BMI was sitting at, I don't know, 16.51%, yeah. And I had the market average as 5.24%. That's 3 times higher than the average company. Yeah? And when I'm looking at this, in this analysis, I was looking at the S&P 500, but I have downloaded myself the financial data for the entire stock market, every single company that's above 1 billion in market capitalization. But the average is roughly the same. So if you draw a visual line here, it's sitting about like 5.4, 5%. Okay, 4.5%. So as a principle, you need to have that average in mind because it's very, very important. It's acting as a magnet for any company whatsoever. It doesn't matter what you invest in. The average at some point we're gonna act as an average. So if your free cash flow yield it's above the market average, the second you get some negative news or something bad happening or economic uncertainty or whatever, that particular company will gonna start trading towards the market average, and applies universally for every single company. You get these exceptions where you have hype and for some reason investors are looking at these companies and they just think it's forever gonna be amazing, and then they calculated the future outlook, and then the stock price is still going up and up and up, and then the valuation doesn't make sense, and they are trading at this kind of free cash flow ratios at 0 point something, like, you know, the Nvidias, the Palantirs, this kind of investments. But sooner or later, even those companies were gonna start going towards the average when there is something bad happening, yeah, like some negative outlook or whatever. So yeah, this is the first thing. I want to promote these ratios. My YouTube channel is not, I'm not making it's not monetized, yeah. I just started it. I don't have any traffic whatsoever, but I'm gonna do it anyway. This is a challenge for myself. If I can start a YouTube channel and then get it popular. But in principle, what I'm gonna do here, I'm gonna promote this ratios, because you have to look at it. And in today's videos, I'm gonna show you how to calculate your ratio, because that's the first sign. That's the first thing that we're going to tell you if a company is undervalued or not. And then when you couple a good free cash flow ratio with some positive catalyst or improving guidance or I don't know, some positive outlook, those stocks 95% of the time we're going to start trending up because they're already depressed. And then when you get something that it's indicating the story will gonna change and the market is overreacting, and the stock price, it's pricing in already a negative outlook, that's when a lot of investors are going to jump into these stocks, and then they're going to try to capitalize on it. Okay. So how? That's the big question. That's the whole point of this video. Is how do I calculate this ratio? It's really basic. Okay, I'm overcomplicating things here. I do it in Excel. I look at more things before I'm investing in a stock. But as a first step, you want your free cash flow ratio to get an idea if it's, at least if it's above or below the market average. Okay. And I will use TradingView on this occasion. I have it open here. And the reason I'm doing that is because I think a lot of us, the average investor, are relying on TradingView for their, data and stuff. So BMI, or let's pick a different one, because like I said, this video is not about BMI. Let's pick Verizon, right? To calculate your free cash flow ratio, all you have to do is check your market capitalization and then check your free cash flow, which you can find in more financials, and then cash flow. Okay, so you're gonna see it here, trailing 12 months. The company is making 21 billion. Okay, and to get your ratio is simple. You're dividing this number to the market capitalization. So if I take 21.12 billion divided by where is it? 172 billion. 172 billion point 0.03. That's 12%. If I already know the market average is 5%, this is the first indicator that this company is probably undervalued. There will gonna be a reason why the company is trading at these levels. So I suggest you to, whenever you invest into a company, like fully research it and understand the business. And then if you like it and your conviction is strong that the company will gonna improve in the long term, then put your money in it. If you don't, you don't. Okay. But this is the first indicator that you should do if you want to keep yourself safe. I learned the hard way. I'm trying to teach you the easy way. That's why I'm recording these videos, because overall I want to help, right? And this is what I did to BMI. This is why I selected it. This is why I highlighted it. So BMI was trading at a amazing free cash flow ratio. It had like 16%, 16.5%, which is really amazing relative to the S&P average, right? And once I noticed it's undervalued relative to the cash flow they're doing at that point, I waited for a catalyst. I waited for something to show me, because when this happens, will always gonna be a reason why the company is so depressed. It's something. In this case, it's a patent cliff. So they're gonna lose revenues. So the investors are pricing in the revenue losses that were gonna happen in the future, right? So that's why the company was trading at these free cash flow ratios. But it's a massive overreaction, because if you think about a company that should be like in the average somewhere, 3 times above the average, that's an overreaction. So for that reason, I waited for a catalyst. Yeah, I invested in this company here, and it's already up like a massive amount. I think it's like 20 something percent. I waited for a catalyst, which I've seen at this earning report here in 31st of July. Okay. What happened here? They announced in the earning release, they improved the guidance. Okay. And that's all you needed. That's all you needed. It wasn't an immediate reaction. So you had the immediate reaction where the stock went up, but then right after that, it continued to go down. But that's all you needed. That's all I needed. I already know the company. It's undervalued from a financial standpoint relative to the cash they're making, and I needed some confirmation that the market is overreacting. And then if something is improving, I needed that confirmation of a better future, right? A better outlook for the company. And that's what the guidance lift provided me. It provided me that proof that the market is overreacting. Okay. And once you get that, it's an easy one. Okay. Because when the guidance is getting lifted, the analysts are reassessing the stock price. They're all gonna start to regrade the company. So you can see, like, I think this is the third one that I'm seeing. They keep raising, so the price target from 52 to 61 and so on. So hopefully more of those were going to come, and then the price were going to go upper and upper and upper. But as a bottom line, please, for your own benefit, for your own safety, keep in mind those two things, which is the free cash flow ratios. When you invest in your company, you want it below. Not below, above. You want it above the market average. You can calculate it yourself very, very easily. And second, look for a catalyst. Look for a positive outlook, and that will gonna keep you safe in your investing journey. Okay. And that's all I did. You don't have to be a big pharma expert. You don't have to be like God knows what investor, like super technical, everybody can do it. But please don't do it by just investing randomly because you see it on the internet. That's why I gave up the idea. I think I was hypocritical when I started my YouTube channel, and I started recommending stocks to people, but I stopped it. I'm moving my channel from a stock recommendation focus to a review other videos focus. Okay. Yeah. At this point in time, I'm recording my videos. I understand they're not gonna be very, very good quality in terms of you can see better. But the reason I'm not doing that, I'm just like freely speaking. I just pick up a topic, and then whatever comes to my mind, I'm gonna record as I go. I'm not preparing anything in advance. I'm not having a script or so to make it entertainment. And the reason for that is because I can't afford to invest a lot of time in it, because I don't have a lot of traffic. I'm not getting anything out of it, and to be frank, I just do it as a hobby. Okay, so I can't spend a week in research and then probably another 2, 3, 4 days to to record the videos, and then another 1 or 2 days to edit the video, to make the perfect video, and then I'm gonna get 40 views for it. I'm gonna need a lot more like subscribes, a lot more channel growth, and then I'm gonna start looking to improve the quality of my videos. Okay, but for now I just record myself, and if I'm gonna get some people who find value in what I'm saying, I will start improving the quality of my videos, and I'm gonna move to a more structured way to present what I'm presenting. Okay, but in the meantime, this is what it is. I'm promoting those two things. Number 1, check your free cash flow ratios. Number 2, look at some sort of progress in the company, some sort of catalyst, something positive, something that will gonna tell you the company will gonna become better and better and better, and not worse and worse from a financial standpoint, of course. Okay. Thank you, and let's see how many views am I gonna have this time. Have a good day. Bye.